Hi, I'm Bobo. In this week's recap, despite stagnant property prices, Hong Kong's number of negative equity cases has continued to climb, reaching 25,163 in the fourth quarter of 2023 and hitting a new high in nearly 20 years. According to data, there were about 11,120 cases in the third quarter of 2023, rising to 25,163 cases in the fourth quarter, a quarterly increase of 126%. The total mortgage amount more than doubled, rising from 59.2 billion Hong Kong dollars to about 131.3 billion Hong Kong dollars. Meanwhile, the unsecured portion of these loans rose threefold to 7.3 billion Hong Kong dollars. According to Eddie Yue, chief executive of the Hong Kong Monetary Authority, the delinquency ratio of the mortgage insurance program currently sits at just 0.02%. In other words, only 1 out of every 5,000 loan cases are negative equity cases, suggesting the risk is controllable. Yue added that the authority would review market conditions and make adjustments where necessary. However, it's expected that housing prices will continue to fall in the first half of the year and that the number of negative equity cases will exceed 30,000. Meanwhile, the potential supply of first-hand flats has reached a record high. According to the Housing Bureau, the anticipated supply of new units over the next 3 to 4 years is 109,000. As of the end of December last year, the number of completed flats reached 20,000 units, and there were 71,000 unsold flats under construction, with both figures recording record highs. Additionally, there were 18,000 flats awaiting the start of construction. In the fourth quarter of last year, construction began on 5,500 flats, marking a 71% increase from the previous quarter. The volume of completed flats also rose by 52% quarter-on-quarter to 3,800 units. Some analyses suggest that if the supply of new flats remains high, it may subsequently impact land prices, potentially creating a vicious cycle. Next, the property market has seen a mix of trends, skewing slightly towards the negative. U.S. Federal Reserve Chair Jerome Powell stated that interest rate cuts may not occur until after March. However, industry experts have pointed out that even if the U.S. reverses course and cuts interest rates this year, Hong Kong may not necessarily follow. The rationale is that during the current cycle of interest rate hikes, Hong Kong's prime rate has only risen by 0.875%, which is significantly less than the 5.25% increase in U.S. interest rates. Therefore, there may not be an immediate need for Hong Kong to match U.S. rate cuts. Turning to the secondhand market now, with less than a week until Chinese New Year, many have been preparing to wind down for the holiday, leading to fewer property viewings and quiet secondhand trading. Hong Kong's 4 biggest real estate agencies recorded 3 to 8 deals for the city's top 10 blue-chip housing estates, with transactions remaining in the single digits. Centerline, in particular, recorded no deals for 7 housing estates. Over the weekend, loss-making transactions continued to dominate the market, so let's discuss 3 examples illustrating this trend. First up is a large apartment in City 1 Shatin, where the original owner lost more than 2.3 million Hong Kong dollars in the process of selling their home. Measuring 819 square feet, the 3-bedroom apartment sold for 9.9 million Hong Kong dollars at about 12,090 Hong Kong dollars per square foot. The original owner bought the flat in 2019 for 12.12 million Hong Kong dollars and held it for about 5 years, exiting the market losing 2.3 million Hong Kong dollars. Next, the longtime owner of a large 2-bedroom apartment also left the market at a loss. This was a lower floor unit in Tower 3B, measuring 542 square feet. The unit sold for 6.9 million Hong Kong dollars at about 12,700 Hong Kong dollars per square foot, a new low for similar units. The original owner bought the flat in 2018 and held the flat for 6 years, booking a loss of about 350,000 Hong Kong dollars, with the flat's value depreciating by 5% during the period. Our final case comes from 18 Upper East in Sai Wan Ho, where a business owner who had held their apartment for 10 years sold at a loss. This was Room C, an upper floor unit measuring 531 square feet. The 3-bedroom apartment sold for 7.05 million Hong Kong dollars at about 13,200 Hong Kong dollars per square foot. The original owner bought it in 2011 for 8.46 million Hong Kong dollars and held it for 13 years, booking a loss of 1.41 million Hong Kong dollars in the sale. Looking at the first-time market, the atmosphere remained relatively quiet, with only about 16 transactions recorded over the weekend, marking a weekly drop of about 74%. Country Garden's Allegro project in Kowloon City recorded 4 transactions, taking the lead. This was followed by the Paddington, located in Changsha Wan, where Henderson Land launched a new batch of units last Wednesday and put 32 units up for sale this past Sunday, eventually selling 3 units. Many developers are waiting until after the Lunar New Year to launch new projects. Currently, there are 4 such projects featuring more than 1,200 units. The largest project is the Berwick Street development in Changsha Wan, with its first phase offering about 700 units. In addition, details concerning 256 units of Cullinan Harbour's Phase 1 development will be released after Chinese New Year, and show flats will also be opened. The units are expected to be sold by tender. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.